Hey, how's it going, YouTube? It has been a little while, has it not? Sorry about that. I only took my first trades of the week today. That's due to the market structure, right? So today we'll talk about the daily plan. We can see this red zone here. We had one red zone, one buy zone, right? A sell zone and a buy zone. Sell zone has been the high day so far on this trend day. I will take a look at the intraday order flow on our smaller time frame, smaller than this 4-hour time frame. Take a look at my trades. I took 4 trades, I'm pretty sure, today. 2 winners, 2 losers. One, two, three, four. Yeah, 4 trades, 2 winners, 2 losers. Green on the day, right? It's all about risk to reward, your risk to reward profile. Even if you have a less than 50% win rate, with a good win to or a good risk to reward profile, you should still be positive EV or still have positive EV. What else? I wanted to share a couple of things. People asked me on StockTwits. I think it's good to rehash for those who may know already, and good to learn for people who don't know. So let's start with today's daily plan, and as always, that starts with the TPO charts. So that first question that someone asked me on StockTwits has to do with this. So let me pause and I'll bring up StockTwits. Sorry. All right. Where are we? If this loads, what's going on? Here we go. So step one of the step one of the daily plan. I'm sorry, is the TPO. So as I usually say, let's create today's daily plan. As always, starting with the time price opportunity chart, also called market profile charts. What are we looking at? We're looking at the shapes of the overall profiles. We're looking at the tops of the profiles, the bottoms of the profiles, where value area lows are, point to controls are, and value area highs. So I had a question over here by Long and Strong. Haha. I'm smart enough, just barely, to know that, or to know you have a lot of knowledge. Also smart enough to see it isn't translating. Is there another way you could display your point? Basically asking, it makes sense that you would look at these things, or at least that's how I interpreted it. Correct me if I'm wrong. But what? So what you're looking at these things? What do you get out of it? What's the point of it? I think is the overall question. So I tried to answer the best I could. Anyone who's been watching YouTube for a while knows I'm not the most articulate person. I'm pretty reserved. I don't speak often. Really, YouTube is the most of my speaking. So I tried to articulate myself the best way possible with typing. So yeah, and again, let me read this first and then we'll go over it. So when day traders, right, because since I am a day trader, look at shapes of market profiles, tops, bottoms, points of control, and value areas, they're trying to assess whether the market is in balance, out of balance, or creating balance. And now this all is going to go to, or all is going to relate to today's kind of point of this, not only a recap, but talking about, is patience really that necessary in trading, or is that an excuse maybe that people use when maybe they're not a good trader? So again, we use it to look at whether the market is in balance, out of balance, creating balance. Right? This information is useful because it provides us insights into the market's psychology. Right? I always try to say, the TPO, we use it because it makes the market auction more palatable, more visually palatable for us to digest the information, right? It helps traders make more informed decisions. When the market is in balance, now this is generally, right, each situation is slightly different, but you always need to understand the context that you're in. But generally, it means supply and demand are roughly equal, right? The price or the market is happy to trade at make up a number, whatever. And the market is trading with a relatively narrow range. Now, this is where this becomes more general. This isn't always the case, but I'm sure you get it. This could be an indication that there's no strong directional bias in the market. So maybe we're not talking about a few days. Maybe we're just talking about one session, a morning session, for example. Like yesterday, we had FOMC. And usually, not all the time, we'll see pre-news events such as FOMC a balanced day. We see balance before the market. Why? There's no strong directional bias or strong sentiment between buyers or sellers to move price pre a news event like that. Why? Because everyone's waiting on the sidelines, or most are waiting for the sidelines to see this, market-generated information, this economic data, whatever. And traders may be better off looking for shorter-term opportunities to make longer-term positions, right? We speak about this, or have spoken about this tons on the YouTube channel. If you're trading a balanced day, you're not swinging for the fences. You're not looking to get on swing trades. Why? Because we're in balance. It's going to be more choppy. You're not going to get the range. You have to go all out or mostly off at either your first target price, or maybe have smaller target prices or other profit targets than usual, because you're not seeing that range. Now, when the market is out of balance, generally, it means that either supply or demand is dominating, right? So if we're in balance for a week, a month, and then we break out of balance, say to the top side, we're out of balance, that means, bulls are in control, right? We're in price discovery mode. And the market is moving in a directional manner. This could be an indication that there is a strong trend in place. And traders may want to look for opportunities to trade with trend. This is where you look for those, the types of trades that you're hitting home runs for, right? Your base hits, I always like to say, your first target price. I usually go at least half at my first target price, sometimes more depending on context. I always say in the room, base hits are our salary. The runners, that small percentage that you keep and swing for the fences, those are your bonuses. But you have to make sure you're profitable with your, air quotes, salary. So hopefully that covers that. And when the market is creating balance, it means that supply and demand are in the process of finding equilibrium. And the market is consolidating within a range, building an offer, building a bid, overall a high volume area. This could be an indication that a breakout is imminent, and traders may want to watch for opportunities to trade that breakout. Understanding the balance or imbalance of the market can be helpful for day traders, because it can provide clues as to what type of day trading strategies may be most effective. For example, if the market is in balance, traders, we went over this. If you like, obviously just pause it and take a read. And this is something that's very, very, very key that I don't think a lot of day traders, at least from what I see on StockTwits, incorporate in their trading. And I think it's very important. All right, so let's get back to the charts. So I come in let's move this over. Come in the morning, and I look at what the overnight session did. I live on live in the east of the U.S., obviously in the Eastern time zone then, so I do not trade the London session at 3 a.m. my time. I am sleeping. So I have a general understanding, right? I do have an understanding of what the past few TPO sessions or past few sessions have done. I know what's going on in the auction. So when I come in the morning, I like to see what London did, what the auction did, relative to where we are in the auction, right? So, the same things. I'm looking at the highs, the lows, value area highs, value area lows. I flip those value area highs, value area lows, points of control, where they are relative to where we are. So, and different tails or different tops and bottoms mean different things, different sets of values, different points of control. So that all means different things, and we use that to build on top of what we already know. So from there, we flip over here. Now, if this is unfamiliar to you, this is a footprint chart. This is how I monitor the order flow. What we're looking at are dissected candlestick charts, right? We see the transacted volume done within each candle. Now, I don't use the 4-hour only, although I do believe that the 4-hour for day trading is, it's my favorite time frame. I think we could get the most information from it, but I also use daily charts, daily footprint charts, that is 30-minute, 5-minute, and when I try to look at like our week ahead videos that we do for the room, sometimes I'll even flip to a weekly. Now, if this is completely new to you, you have no idea what you're looking at, just go to the home of the YouTube page, and I have a introductory video on how to read these charts. So, do we have an aggressive bid moving up in the tape? Do we have an aggressive offer? Is one side passive, just sitting at a level, willing to take in whatever the other side would give? Do we have trapped volume somewhere? Do we have prices where we didn't transact a lot of volume? We have volume or gaps in volume gaps, whatever. Same thing. Low volume areas, high volume areas. Do we have exhaustion at the lows, exhaustion at the highs? Are we still transacting a lot at the highs or lows? All that type of stuff. From there, I go to my daily chart, and I do the exact same thing. And it's these 3 steps, rinse and repeat, every single day that I do to create my daily plans that I post on StockTwits and the community tab on YouTube. So I'll annotate the TPO chart, I'll annotate the footprint charts, like this, whatever I think is necessary and whatever really goes into making my levels for that specific day. And then we create the daily plan. So without further ado, let's get into today's price action, and let's talk about or a little bit about patience. A lot of people, I think most people would say that patience is very, very necessary in trading, right? And for example, these past few weeks, I've been trading almost every single day that I can, right? I just moved, so it's been a little bit hectic, but for the most part, I've been trading every single day. Now this week, I haven't traded until today, Thursday, and that's because the market structure. So I'm not going to go too deep into this because, market auction theory, the overall structure, it's a little in-depth, and I just saved that for the room. We have a whole introductory series explaining this stuff, but to sum it up, market structure at these lows, and especially once we started auctioning up from here, the market was saying, this is not a short, do not short this. And I had this buy zone here, right? We touched it to the tick this day. This overnight session just front ran it. And there's tons of opportunity to be long down here. Now, as we start auctioning up, any long that's going to be taken, at least for me, is something that's going to be a more aggressive long, right? I want to be a long from down here, not up here. So, patience. I have to just wait for either a deeper pullback or for short to present itself. And we've had no shorts, at all for me, until after yesterday with FOMC. We had this huge down close candle, finally a sign that bulls are showing a bit of weakness. So yeah, come in today, I have levels that I would like to short off of, and that's where we see some of the levels today, right? I'm not using it just off footprint. I base my levels off of market auction theory, off of the TPO, things on there, as well as the footprint charts. So let's take a look at the intraday price action. Let's take a look at the 30-minute, and then we'll go and look at my executions for the day. So obviously open candle here. We, as of now, have had a trend day, right? Just got this pullback now, and bulls are trying to move up in the tape. We have an offer right here trying to hold this, right? This is what chart traders, as I like to call them, call what? A wedge, right? Now with footprint, it makes it so much easier because we're actually able to see the transactions when in here, see what's a stop run and what's not, all able to be read from the tape. So let's take a look at my executions. I took one trade right towards the open, literally in the first 5-minute candle, obviously. Here, zero print. Now this was not where I was looking to trade, right? This wasn't my sell zone, but structurally this is a level. I saw sellers here, so instead of going full size and taking this trade full size, I scaled down. This was only a third size. Full entry market order here. 75% off at my 2R, or 2 times what I'm risking. I usually risk 3 points, so this was 6-point profit, and then that last 25% of my remaining position was stopped at break even, right? So we carry on in the day. 1 second, let me get that. All right, so we carry on in the day, and that was right here. So when we look at that on a 30-minute chart, we see an offer here, right? And I was just trading with this offer, knowing that this wasn't a hold all day type of trade, right? That's why I went most off at my first target price. Yeah. So we continue on. We're just trading up, and this is where patience comes once again into one's trading. You need to have patience and wait for the levels. Back off. You should know this isn't an area that one wants to be transacting in, right? To have a positive win rate and whatnot, A huge thing is transacting only at key inflection points, right? Key inflection points have the best risk to reward, um, and that's all what trading is literally having a good win rate and a good risk to reward. Um, you have a 4-to-1 risk to reward profile, your win rate could be pretty low, and you still could be making money, right? You have to document your trades. Right, that's the other thing, sorry. Um, Let me pull this back up because this relates, right? I think it was here. So, want to make trading your career? You need to work for it and put in the time. You need to know the context of what's going on in the market. Just because you take a trade that has the proper framework does not mean it's a valid trade. That's just a gamble. Trades need to have the context and framework. So, a chart trader, you trade wedges or you trade double tops, let's say. That double top is your framework, but does it match the context? Is that at a key inflection point in the daily, on your daily or weekly and monthly chart that you want to be a seller at, or is this a double top that you found randomly on the 1-minute chart? You need the framework and the context. The more confluence you have between your framework, context, your different tools that you use, the less risky your trades are. And remember, trading is all about risk to reward. You need to minimize your risk exposure in the markets, especially as a day trader. So I had Average Joe's over here. He said, trading is not my career, but I would like it to be. Actually, more so advising as a career. I do the same, find great setups and context on the charts and fundamentals, but yet get trigger shy because I question all my analysis, which is an issue I need to address. Now, this was my take. I totally feel that. I think we do that. I think we all do that sometimes, right? As we go over the trades, the next trades that I go, next trades that I took in the day. Geez, I'm sorry. We'll see. I did make mistakes, I'm not perfect. No one's perfect when it comes to trading. So, but as far as addressing that, in my experience, what has helped was documenting all of your trades. What is my win rate? What is my current risk to reward profile? And what percentage of winners do I need for a positive EV? Do I have it? If not, well, you shouldn't be trading real money, right? Go back to Sim and find a strategy that works for you. If you do have positive EV, then you could take that second guessing out of your trading. Why? You should know that, or that although this could be a wrong trade, right? This one trade can get stopped out. Overall, at the end of the week, at the end of the month, or end of the day, doesn't matter. You will still be positive. So take that emotion out. Click the buttons because you have trust in your reading of the market. You have the stats in front of you that, yeah, you're not right all the time. But at the end of the day, you're right enough that you're still making money. So I hope it helps. And this goes out to Average Joe's and to anyone else. If there's something that I could help you with, or you have a question about, or whatever it may be, leave a comment. Feel free to email me. It's usually in my description. It should be chocolabtrading@gmail.com. Feel free to reach out. That's what I'm here for. So yeah, I think that's good to share as well. I'll leave this open, get this out of here once more, and let's take a look at the rest of my trades. So the rest of my trades I took, all my trades today were to the short side, but I took 2 stops here. So look at this. I front ran my own level, right? And this one was a 3rd size. Why? Because I knew I was front running it. I saw selling and I just was so impatient that I needed to get some risk on. So I was like, all right, I'll take it size down. I got a winning trade with 3rd size. Let's throw in a 3rd size. Did that here, took the stop out. Now it's break even on the day, and I took 2 more trades. I almost always, if I'm green on the day, I'll either won't take any trades or size down way less and, just not let myself go red. And here, I actually went back red, which is something rare of me, and I try not to do. Patience, probably, right? This is patience. I gave back the profits that I had in the day because I was not patient. Re-enter here. Took another stop out. I'm okay with this stop out. This is a good read, but there's just one more stop run. So this was a re-enter here. This green arrow was this stop out. Re-enter pretty much immediately, stopped out. now this red arrow again, this execution is a little bit difficult, but you can see it here now, right? Zero print, no one else is willing to transact at the highs of my sell zone. I am going short up here, 75, and now these, oh my goodness, this first trade was a third size, these last two trades were full size. So 75% off here to take back what I lost pretty much at 2R, and then all out here. Now this wasn't based on Rs, this was just a structural level, right? All out here, not holding for longer, even though, as we can see, it could go longer. Just playing, not necessarily rules, actually. I don't have rules to go all out at a structural level. Just chances are, I'd rather be safer than sorry, secure these profits, and tomorrow's a new day, right? So that's my trading today. Not perfect. I hope anyone who did take trades today was green on the day. If you're interested in this approach, I always leave the link to my website in the description. I have a small mentorship group if you are interested, or if you just want those annotated pictures that I showed on covered. Of course, you'll have access to just the daily plan tab in the Discord server. If not, hope you guys have a great week, and I'll see you in the next recap. We'll see whether we have one tomorrow or not, depending on the price action. See you then, guys. Good luck.